Yo, guys, what's going on? Welcome back to another episode of Beat the Odds, man. We got a good show for y'all today. How y'all doing, man?
We
Can't
do
even
got a good
complain.
show. We do got a good show. What's going on, guys?
The last few shows have been great, man.
I mean,
That's because
it's not to say
the
it's not to say
information
that
velocity has been fast. Y'all feel that way? So there's been a lot of stuff to talk about. I feel like even today, right before we thought we had an agenda, what should we do? But then right before we got on, I saw that Anthropic filed the IPO. I'm like, oh shit, that's a whole different thing. So I feel like the news cycle feels much faster, which
the
gives
news
us
cycle
exciting topics to talk about.
the news cycle is much faster. And yes, exactly. Just 4 hours that the Anthropic news came out. And then also too, things just only matter for like 1 or 2 days. So
That's right.
we try to get the most relevant stuff in basically the last 12 hours. Sometimes we have a little bit more time than that, 36 hours. But a lot of times things are not relevant. Like, for example, like, has anybody talked about the Drake album? Like, what's the last time that anybody mentioned the Drake album? I think it came out 2 weeks ago. But
Yeah. No,
and
I
by the
haven't.
way, I like it. I like the album personally.
Me too. Me too. Me too. I do like it. I haven't heard anybody talking about it. But I know people listening to it though. I know the
Oh
numbers been
yeah,
going up.
well
I
yeah, the
know
Yeah,
numbers is up. I'm listening to
the
it.
numbers up.
I'm
Yeah,
gonna be
yeah,
honest.
yeah. No, he
It,
getting stamps for me.
it's going crazy in the club. It's going crazy in the club. Like
Are
that.
you in the
That
club,
what's that song? The Janice one. I think it is.
Janice? Yeah, yeah,
Yeah.
yeah.
That one's doing numbers. And that's what Drake really know how to do. He know how to position himself to do numbers. Like he don't really need every song to be like a hit. He just need one or two to stay
Hmm.
top of mind. So
For sure. I
yeah,
mean, he makes good music at the end of the day. But like the thing that we keep seeing though is that this going back to that news cycle point is that things are talked about for a much shorter period of time. And then we're getting thrown bigger stuff that seem to be more important to talk about much faster. And it's not often that you have something that has longevity. Now, I guess we could start off with the topic one because that
well,
did
we
just
got
come
we
out.
got to start there.
Okay.
I literally just saw it. I was on TechCrunch right before we hopped on. I'm like, let me just see what the headline news is. You know what I'm saying? Seeing if something popped up, and I just saw Anthropic filed their IPO. They filed to go public. And so very soon we'll have access to that S1, which will give us deep insight into the financials. I don't know. I think they're going public. Let me see what it is. They're targeting right now. They have a valuation of 965 billion. That's after the last round. They just raised $65 billion not too long ago. The current article I see don't have a target for what they're looking to raise.
Yeah. So I
They
think with this.
recently said they're. Oh, go ahead, bro.
No, I was going to say because I was looking into that too. So the route that they actually ended up taking was just more so a private notifying of the SEC, and that gives them more optionality in terms of when they get to choose that they actually want to start the IPO like roadshow versus like what SpaceX just did with their public S1 and filing. Usually those are more like immediate, like a few weeks to probably like a month. And so this is more so just Anthropic just trying to like position themselves, they're signaling to the market, but they have optionality in terms of like when they would get to choose to actually like go public.
Yeah, I think it makes sense. I think right now, I would imagine what's happening internally to probably what's speeding this up. First off, obviously, the public markets are significantly larger than the private markets, although there is a significant amount of capital in the private space. But what I think is probably happening is that they're seeing their revenue velocity scale so much and so quickly, and the margins are probably so good. There's just probably no reason to stay private anymore. Like the business model is clearly probably there. You know what I'm saying? Whereas, a lot of these AI companies, even though if they have accelerated revenue, there's still a lot to figure out. There's still a lot of stuff internally. There's still a lot of investments that they have, capital investments they have to make. Obviously, Anthropic as well, but they just signed that deal with SpaceX for that data center in Memphis, right? Then they raised that capital. That they raised a ton of capital from investors recently, and then they have crazy growth. I mean, they got a lot of things going for them at the same time. So I feel like right now is a good time. Even if they don't do it right now, I think even announcing it, right, and getting both institutional investors excited to come in, and then also getting retail investors to come in, because I think the retail market is obviously showing signs of having interest in AI companies, which we talk a lot about, different AI stocks and stuff on here as retail investors. So I think right now is a good time for them to kind of make this call. Another thing that we were talking about right before joining is this idea. I was joking, but I'm kind of serious. Is like timing, the sequence of this matters because there's only so much capital in the market, right? Like there's only so much capital to be deployed at every step, at every layer, right? And so with SpaceX going public, and that's a multi-trillion-dollar public raise. Then you got Anthropic; they're going to be over $1 trillion. Then OpenAI is coming; they're going to be over. Like it's only so many. It's only so many. Like we're seeing trillion-dollar private companies go public. I think we should take a moment and actually like take that in. We've never seen this before. We've never seen trillion-dollar private companies go public into the public market. Like that's unheard of. We just started seeing trillion-dollar public companies. So it's pretty insane to see a private company, private entity that was started by founders, like probably people that's listening to the pod, or founders just like us, built a company, and now that shit is worth $1 trillion and they're going public. That's pretty insane.
We're seeing paradigm shifts. We're seeing the glass ceilings break. Essentially, what is now possible is starting to show, and it is a unique moment. It's a very, very unique moment. I'm not saying we're going to have $100 trillion companies, but we are definitely going to see a lot more $1 billion companies, and the mega winners will be the $1 trillion companies like Anthropic and SpaceX and the like. But it's a unique time, and these companies are building out so much infrastructure. I think that it's still not even obvious to everyone what happens. What I mean by that is that this money is not just this abstract thing that doesn't exist. A lot of this capital is being deployed in real ways, and it trickles down into real raw materials being bought, real people being hired to coordinate projects, real things that are going into different cities and getting rejected in a lot of cities, but going into different cities and different campaigns, new jobs. Those jobs are literally putting bread and sandwiches on people's tables, things of that nature. So this is a ton of money and a ton of resources that are being allocated and used. And then on top of that, it suggests a certain level of momentum that'll go to another level. If Anthropic if they're already at a point where, as Dre mentioned, the business model is so solid that they feel very confident, which there's no argument on that. There's no argument on Anthropic's business model and, whether or not it's profitable or not. It, they make money, and they definitely make money with businesses and enterprises. But when you dump the IPO money on top of the momentum they already have, you can only imagine how much faster they can move with that capital. I mean, and I don't know how the stock will perform. Will it come out the gate and keep going up, or will it have these peaks and valleys? I don't know, but as far as Anthropic, it's going to be a big win for everybody involved, the investors, the employees, etc. And I'm excited to see what they do with all this extra capital. I mean, they just rose, I think, $50 billion, and they're looking like they're going to get a lot more through this IPO. So, I mean, is it going to be more data centers? Is it going to be more infrastructure? Is it going to be more partnerships? Are we going to see more ads? Are we going to see more aggressiveness from Dario? He should have more confidence. I would think he has. I'm not saying he's not confident now, but he should have more confidence with that type of momentum. I just don't know. Like Dre said, we never seen this. We never seen companies come out with it, and SpaceX is a little bit different only because we know Elon kind of has been in this realm, in this $100 billion realm for a while. It's still a big deal, but we kind of see the whole Elon vision, multiple $100 billion companies, etc.
Yeah,
but
that's
to see
crazy
it,
for one person to control that
yeah,
much capital. Like,
yeah.
bro, I think either two things have to be true right now. Either one of the true. The two. Either we are in the greatest economic and growth capital point in the history of mankind, and we're just lucky, right? We just struck luck out of the whole history of humanity to happen to be a part of that, right? And we're just very lucky, right? So we're in that moment. Or this is about to be the biggest crash that we've seen in a very, very long time. Because I think the question that's going through my mind is right now there seems to be a big disconnect, right? Wall Street is happy because everybody's up and to the right. But that looks very different from the reality of everyday people. And so while we celebrate these notable moments in history about, you know, trillion-dollar companies going public, which again is crazy. Elon running multiple trillion-dollar companies, crazy. It's hard to ask the question what's really going on underneath the hood of everything because that reality seems really disconnected from the everyday person. And so the question is, how long can this go on? Things can't keep going up and to the right forever, right? They have to eventually come back down. And so again, either we're in the greatest moment or we're in the greatest bubble or maybe both.
What do you think? What do you think?
I think a crash is coming. I do. I
Shit.
do. I think a major crash is coming. I've been reading this book by Andrew Sorkin, which I highly recommend, called 1929. First of all, Andrew Sorkin, just as a writer, is a phenomenal writer. He's a journalist on CNBC. He also does the Deal Conference. So very, very tapped in guy into Wall Street. He also wrote a book about the 2008 recession crash as well. So he has a really good pulse on like these crashes and studying the history of economics, right? And what kind of leads into it. And I mean, from everything I'm kind of seeing from like what happened in the 1920s, where you have high optimism from investors, high optimism from Wall Street. You have a lot of leverage in the market. You have deregulation. So you have, the ability to do things now with less guardrails in place, less overchecks, less oversight. I mean, whenever that happens, that's in every case in history. Whenever there's less regulation, less oversight in the financial market, shit always goes left. It always does. And so I don't see how this is any different from that. So that's just one heuristic. But my personal opinion, just given all the things that I mentioned, I really do think a crash is coming. I mean, we're brewing for one. I mean, it's just part of the process too. You can't have an economic system like we have and not have any crashes, and we haven't had one since 2008.
Yeah. I
Oh,
think we're due.
okay, a general crash, not due to AI, just a
No,
general
no, no.
market crash.
I think AI plays a factor in that, but I'm saying I think the end result is an economic crash,
Hmm.
crisis.
So
Hmm.
That's what I kind of see happening. What do you think, Brylan?
yeah, I think there's a few things because part of me is I feel like me personally, like at least when it comes to me making trades right now, yeah, I think I'm in the position where like I'm still trying to figure it out. I think on one hand, yeah, when you see Nvidia come out and post the type of numbers they did on a quarterly basis, it's fucking nuts, bro. Like the fact that they went from $3 billion, a couple years ago in data center revenue to I think upwards of 70 billion last quarter. That's unprecedented. And I definitely think there's a lot more like catalysts. Yeah, rather if it's I feel like the physical like AI narrative, and this is just like outside of just humanoid robots, but I think robotics in general. I think that could be a catalyst for Nvidia continuing to do well. And then obviously, if Nvidia does well, all the other components do well. So we are talking about like SanDisk, Micron, etc. And so I think infrastructure for the most part is positioned, I think, to do well. I think where the downside could come for them, and I think this translates like into the AI companies, is a few things. I think the risk that could potentially hit them is, yeah, if you there was this chart, I'll have to find it, but when you look at the total amount of debt that the major companies, so these hyperscalers have been like issuing or like taking on through bonds or whatever, over the last few years, it's basically been zero because it's mostly been cash from their balance sheet. This year alone, I think they're on pace together to do damn near what they're doing in cash, in terms of what they're spending on, like, these data centers, right? And so they just essentially went from zero debt to $200 billion worth of debt in less than a quarter. I haven't really dove into that, so I don't have much of an opinion. But I think part of what has been keeping us from like going down this whole narrative of like, okay, is this going to be like the .com crash, is because debt has not been involved. Now it is, right? And some people would say that this is good debt because these companies are, making revenue. But I think the narrative that has been changing, and this brings me to my second point where I think these AI companies really, 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 really could be in trouble, is cost. And because cost is now starting to become something top of mind, I think you have a lot of companies that are coming out and starting to be public about them using open source models. There was a chart that came out from I can't remember if it was Semi Analysis or Meteor, but they're two reputable sources in kind of the AI space. And the actual company that does the most tokens, AI tokens in the world? If you had to guess, who would it be?
What do you mean by does the most tokens? Like consumes the
Their,
most tokens?
their model produces the most tokens.
Let's say
Who's
Google.
us?
He said take a guess. I would say Google.
Alibaba.
Mm,
Alibaba.
okay.
Alibaba, I think it was like 50 to 60% of all AI tokens produced within the last year have been produced by Alibaba. And part of that
They
might
need more
be,
efficiency.
yeah, part of that might be China. But the thing about Alibaba is their coin model is open source, which brings me to my point around cost. I think you have these open source models, one starting to get close to the frontier. They necessarily, like for most tasks, they don't need to be at the frontier, but they're highly performant on cost. And there's this recent company that came out. It's called Trajectory. I believe it was started by some former Google DeepMind researchers. But their whole thing is this idea of basically continual learning. And all that means is basically enabling a model to be able to continue to like learn over time. And they've already done this with like major companies where they've taken an open source model like Quinn or Kimi and then basically took their data and then did reinforcement learning on top of that open source model. And say for example, it was Harvey. You can go read the blog post. But the Harvey case study showed that when they did this, it essentially reached the level of Opus 4.7 and OpenAI's GPT 5, which were the models that they were using for those legal tasks before, but at 100 times less cost. And I think if you keep getting more companies coming out telling that narrative, those big companies are going to be in trouble, bro, very fast.
And if those big companies are in trouble, then what happens to the ecosystem? Because right now, the whole entire AI ecosystem is being propped up by a handful of players, right?
Yeah,
And then,
yeah,
and then too, I would say is where are the returns going to come from, right? Because these hyperscalers are not making these investments for nothing, right? For Amazon, I think it's obvious for them because they have AWS, and so I think for them they're just a platform, right? So it makes a lot of sense. I think for the Google, it makes sense as well. But I mean, I guess go a step right outside the hyperscale bubble, and you have companies like even like ServiceNow, for example, right, or Salesforce, for example, right? They're not necessarily the hyperscale bucket, but they're spending an enormous amount of capex on AI, right? Whether it be data centers, whether it be on tokens, whether it be on these contracts, whatever it may be, right? Like just spending a lot of money. So the question I would have is where are these returns coming from?
yeah.
Where the returns coming from on the business that's spending the AI, or are you talking about the AI business
Correct.
itself?
Correct. For the Salesforce, for the ServiceNow, for these
Okay.
companies that are
Yeah.
spending committing
Yeah.
hundreds of millions, hundreds of
Hmm.
billions of dollars in capex
Yeah.
in this AI race. Again, for the like going back to what Brylan said, he said, okay, I think the infrastructure is going to be fine. I agree with you. So infrastructure meaning AWS, I assume, right? Like,
Yeah, 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 yeah.
yeah, like okay, so cool. I agree. So the next layer above that, does that mean everybody else in the ecosystem is fucked? And if so, then I mean, it sounds like that's
But
the precursor to the crash, right?
I think the main thing that these AI companies need to figure out, and I believe they will figure these things out, is ultimately going to be efficiency. And I think efficiency will drive the price down. And I think that if the price is low enough, you'll see companies get a higher ROI per token spent, and it will justify the price. Unfortunately, at the moment, for example, I think I saw Uber's CFO struggling to justify the AI budget for the engineering that's going on there. Internally at our company, we we don't get too caught up on AI budgets. At the same time, it's something that we are aware of and that we monitor, and we can see how much each person spends on AI in Cursor, for example. And it allows you to be kind of mindful maybe of the models you're using and stuff of that nature. And I would say that it's about efficiency. So that's the main thing, because right now I think that they're in a place where the models, they're trying to offer a lot of the models, and not only is the efficiency, they also need to be as useful as they possibly can. And I think what I see is a race to making models continuously more useful and helpful, but then also creating products, for example, Codex and Cloud Code or Codework. I think Codework and Codex are drastically underestimated because of the form factor, because of the way that they're positioned, originally being towards engineers, software engineer, people in tech and stuff of that nature. But I think you're gonna literally see the ability for these AIs to completely control computers completely, and do a task from start to finish with no issues for a cheap cost, cheaper than a human. And I think that would have a high ROI. But the game is going to be accuracy, intelligence, and then efficiency. And if they can do that, I think they'll be fine. But if they run into any issues on that, that will be a problem for them.
What does efficiency look like? What do you mean when you say that?
The main thing that I mean by that is models are fast and cheap. So that's the main thing. If they're slower, so it takes longer to get answers, people are impatient, and also time is very valuable. Time is the most valuable resource, so you want to be as fast as possible. And that's part of the reason why models that are faster tend to add up quicker. It's no different than when you're driving a car. If you have gas in your car and you put it in sport mode, it's going to burn gas faster. So then you're going to have to get gas more often. Time is the most valuable resource. And so you want a car that has a really high efficient engine. And this is one thing that Tesla understands fundamentally when they build their cars. But just using that as an analogy to AI, you want these models to be very efficient, to where the energy that you're putting in is not just being wasted unnecessarily. And we know that's the case, because technology always improves and gets more efficient over time. So we can already assume that the models are not that efficient. They might be more efficient than they were 5 years ago, but we can already reasonably assume they have not reached their maximum level of efficiency. So based on the amount of energy. So I would just say speed and price. And yeah, that's the main thing.
Yeah, I think where I would probably push back is like, I think I agree with you. Like, yeah, the incentive is there for them to make their models, especially like definitely faster for sure, and a lot more efficient. I think both OpenAI and Anthropic, specifically with their like latest releases, talked about how they made it more efficient in terms of like the number of like thinking tokens that it was using, because it was just kind of consuming too much. But but I think where I would push back is, I think if we look at efficiency in terms of pricing, I think it's going to be hard to compete with open source and Chinese models. And the reason why it will be hard to compete is, I think everything that comes after the training, right, of the initial base model, right? And so when you train the initial base model, that's just the initial whatever the capex is. But we're not talking about the fact that like they have to do post training. Now all of a sudden they're doing reinforcement learning for like agents. And so like all those additional costs to create these models that we're using in Cloud Code or Codex or whatever, yeah, I just foresee that being hard to remove, right? And I think
Yeah. My bad. So let me build on top of that, though. So let's say I agree with that, because I think pretty much am with that, where if you try to have open source models compete with the frontier models, that's just going to be tricky. And you made a point earlier about open source. Most things are not going to need a ton of intelligence. So from that standpoint, these open source models, less powerful, don't require as much resources, don't require as much energy, etc. They are going to be able to basically pick up a large majority of tasks and things that needs to be done. In fact, you may see these small robots and toys or whatever they are running models that have nothing to do with being connected to OpenAI or Anthropic or Gemini. It wouldn't surprise me. So then what that I would have to believe is that the frontier companies stop competing for the mass and they start competing on the tasks that require extreme intelligence. And they focus on that. Don't try to power the new AI toy that somebody got for their baby. Don't worry about that. Leave that alone. Like, yeah, open source models, somebody will do that. Don't try to power, like, try to power the things that are that basically open source model will never be able to touch, because it just won't be. It won't be. So I would say, yeah, I do agree with you. They wouldn't be able to compete on most tasks.
the long tail,
But yes. But
Yeah.
there's a elite category of tasks I think that open source won't be able to touch.
So let me.
I actually think the frontier models are going to get cost down. I actually think they will be able to compete with the open source models. Like, I think they will. I think they'll definitely be able to. I mean, if they have the best intelligence, I would assume they would use that intelligence to figure out how to get costs down. I mean, like, they're not gonna go out of business competing with open source models. I don't think so. I mean, so I'm not as bullish on open source. I know you always have been, Brylan, and like you've pushed that narrative because of the cost. But to me, this is always what happens when technology comes out, right? Every major piece of technology that you can possibly point to that has been meaningful started off expensive and inefficient. Everyone. The cost of a television was crazy when it first came out. The cost of a toaster was insane. You know what I'm saying? Like everything, the cost of a car, right? The cost of a computer, everything, right? And over time, it always goes down. So people didn't stop riding in cars to go continue to ride on horses, right? Because cars were expensive, right? Like over time, it starts to go down. And so I think that's what's going to happen. So it doesn't mean that open source don't have a place. So I agree with Rodney's analogy. Like, yes, there will be open source models probably using like the child's toy, right? Right. I do see that a place for that, but I don't think these open source models are going to be that meaningful. Maybe I'm wrong on that, but like, what happened to Llama? I mean, like are they still on that? Like, what they Mark was the biggest pusher of that. Like, what happened to that? I
Mark's
haven't heard nothing
struggling
about it.
though.
So like, you know what I'm saying? So it's like I just don't believe that. And we've all been in software, and like, yeah, we all use open source projects, but like, bro, closed source software is dominates. I mean, it's still powerful, right? Like, for a reason.
Probably because of how convenient. One thing I can say about open source
Exactly. Yeah.
is that it's usually a more manual solution, and even if it's better and cheaper, it's not always the most convenient. And that could be something where theoretically it would be better if everybody used open source and they could have an equivalent open source model, but they may not because of how simple it is. And if the other companies can get faster to a cheaper, but I guess time will tell. But I do see, though, the frontier models, there's going to be a set of tasks that open source will not be able to touch. There's going to be a set of tasks that are just in such a higher category of intelligence that they're just not going to be able to touch it. Nobody's going to be able to touch it.
So let's paint these as like scenarios, right? Because I definitely, I mean, I think for most tasks, yeah, that long tail, it probably could have stopped at like Claude 3.5 if we're going to be honest, for a lot of,
Yeah.
like, even like most tasks don't require crazy intelligence, But I do think the unlock for a lot of this has been like computer use, going back to what you were saying earlier, Rodney. I think I definitely fall into the camp. I think, yeah, like I do think there's a chunk of task. So like that 20% of task that creates like 80% of the value frontiers will compete with. But I'll actually push back against myself and say I think the unlock for all of this is going to be, yeah, they're throwing out the term RSI, so recursive self improvement. But all that is where the model starts to build the model, right? So we talked about continual learning where it's able to learn over time and improve. But RSI is like where the model starts to build the model. And so going back what we were talking about, like what makes these APIs, these tokens expensive now, it's like any business. It's the people, it's the talent, it's the fact that they're paying that these folks high wages, and that has to be factored in. But when you have this technique with RSI that could improve the model and remove these humans from the loop, minus a few, all those costs essentially are going to go to zero. I think that potentially could be the thing that ends up dropping.
See, I'm gonna push back on that. I'm gonna push back
Go
on that
ahead.
because that's an easy thing to point to, right? But let's take on the last pod we talked about Meta laying off people, and I think they laid off like 8,000 people. And I took a look at it, like how much revenue does that save them? It was like $2 to $3 billion a year. That's nothing. That's nothing. Like 2 to 3 billion for Meta, like that's that's a rounding error for them. You know what I'm saying? Like, so when you really think about it, like, so I fundamentally agree that, like, yes, if you look at any business, that line item of labor and salaries is always the most expensive. But when we talk about some of these hyperscale companies with the margin profiles that they have, with the accelerated revenue they have, like, I mean, again, unless I'm misunderstanding what you're saying, like, I just think that trade off that you're talking about is like it's so insignificant. Like, again, they laid off 8,000 people, bro. If any one of us was running a company with 8,000 employees, just 8,000 employees, we that would be a sizable company, and that's nothing to them. You know what I'm saying? They're going to do what 100 billion this year, to 150 billion. I mean, something crazy, right?
Yeah, 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 yeah.
In profit. You know what I'm saying? So I don't know. I push back against that narrative when we're talking about these types of companies. If we're talking about the mom and pop shop, okay, cool. Yes, you're right. They're a small business, 100%. I agree with you. But these hyperscalers, bro, like these layoffs are lazy excuses to what's happening. These are the best, exceptional, high quality business that you'll ever see with the craziest margins you'll ever see, craziest velocity, crazy lock in. Like, laying off more people or getting more staff is not going to move the needle for these companies. At least that's my, based on what I'm saying.
So where's the
Okay.
market going? Where do we think it's going?
I said we're going to a crash. I told y'all where we're going.
What's your time?
I um,
I mean, I say within the next 3 years, bro. I mean, how much, bro? How much more do we realistically expect Nvidia to keep going up? Where is the money coming from? I think we have to ask that question. Like, where
That's
is the capital coming from? Where is it going? How is it being spent? Who's putting money where? Where, like, we have to look at that. And when you start looking at that throughput, you start asking, like, well, where's the growth coming from?
is the crash good or bad for businesses and consumers that use AI?
I mean, anytime I think of a crash, I just think of people who are. I don't even know how to answer that question. I think it's gonna be bad because I mean, I, I just go back to every other crash. I don't know. I don't know how it affect people specifically using AI or not. But I don't know if y'all remember how 2008 was. I don't know. I mean, maybe if you were in like war, like defense, maybe you made money then. But I don't know too many industries that were doing really well in 2008.
Yeah. So I guess what I'm trying to figure out is that would a crash force them to raise the prices per token or for AI, or will it force them to charge what AI is supposed to be per token? Because we have to assume that right now that there's some subsidies going on. Would a crash force them to say, "Hey, okay, we can't subsidize this anymore, so now AI is more expensive," or would it force them to say, "Hey, look, we can't make money off this. We'll give it to you on pennies on the dollar." Like that's what I'm trying to figure out. Will we get more AI from a crash, or will we get less AI from a crash per dollar?
I figured.
Because I would love to know
I
that.
don't know.
Because I would love to know that. That would be something I would personally love to know. Because I want more AI. I want as much AI as fast as possible for as cheap as possible. So if there's going to be a crash and that means that I'm going to get more AI, that would be great. But I have this feeling that it may not mean that. It may mean, oh no, we got to be more disciplined and we got to charge a more realistic price for these extremely intelligent models.
I'm gonna say price will be higher. And I'm gonna say I'll say why. I think if a crash happens, I would assume a lot of these well, I'm gonna call like neo cloud companies like CoreWeaves and all of these companies could potentially be hit really hard, and other players in the AI stack below Nvidia and below some of these other hyperscalers. I think those a lot of those players may start to crumble and go under. They'll start probably getting absorbed by some of the bigger companies. So you'll start to see a lot of acquihires, if possible, if they still have the cash to make those. And so I think you'll have less players. And I think with less players, then you'll have consolidation of pricing and pricing control. And so, but I don't think the demand changes. I think the demand will be there. I think if the economy went to shit, I think more people will probably be leaning on AI to solve use cases to get shit done. But because I think there will probably be a consolidation of companies, consolidation of players in the space, I can't see why they would be with demand rising. I can't see why they would lower costs. So my
Yeah.
natural instinct would be that I think prices will go up. That's just
Yes.
how I would kind of game theory that out.
Yeah. Yeah. For sure. For sure. Okay. Okay. Well, in that case, use as much AI as you can today to get ahead. Use as much AI as possible. Use Codex, use Claude Code. By the way,
All the tools.
by the way, Codex can do more than you think.
Facts.
It's just try just if you don't like Codex, do Cowork. It can do more than you think. Ask it to do things. Every day I'm getting surprised, not just from a code standpoint. I've got my mom using Codex and it's doing it's able to do things. It's able to do things that it can control your computer. This is not that, and it can do it flawlessly. It can do a multi-step task. Go grab data from here, put it in a spreadsheet here, analyze this, put this. It's everybody. I say use it, and I think I shaved for Brylan. I don't know if it was off call. One of the things I gatekeep, like I was scheduling dates. I was like, look, I got too many dates. I got to schedule. Like I said, keep like go to my messages and do it. It went through all that schedule, calendar invites. You know, all I gotta do is show up. All I gotta do is show up. It can't get no easier than that. So imagine all the other, and I just dropped that because normally I would gatekeep a lot of stuff. I noticed that I'd be gatekeeping. So I'm gonna try to share a little bit more information, but nah.
Speaking of using more AI, let's move the conversation forward. Let's talk about Robinhood. Well, not even just Robinhood, but these trading agents, because we had a long, in-depth conversation about this in our chat. We have a little bit of difference of opinions on how this could potentially play out, and some interesting questions too. You know what I'm saying? So I didn't even know that this was a trend happening. So Brian, shout out to you for making this more clear. But Robinhood,
Yeah.
Public, and you said Liquid, they all ship these consumer agent trading agents. Essentially, they can make trades on behalf of retail. I'm gonna say retail investors because that's most of these. That's just most people who are using Robinhood in public, right? I would assume a retail. So yeah, they've released these trading agents that can essentially make trades for you. Take into account, your account, how much you have to actually trade with, kind of rebalance your account, do market research, find stocks that you've probably never even heard of before, do a lot of price discovery work for you as well. So there's a lot of things that they can do. And we had this kind of, Brian, I think you had a more sinister take on this.
We have a very sinister take on this. Let's start with the optimism. Rodney, you were very optimistic.
Was I?
You were optimistic. I'd probably put Dre in the middle, but leaning more
I was
optimistic.
most optimistic. I said I was going to put up. I was going to put my bread into it right away. I signed up actually.
Hey,
Yeah.
I signed up. What's the
Dre's the most optimistic. I'm more so. And by the way, we had a 30-minute like text back and forth. Like 30 minutes we just in the in the text. and Dre's the most optimistic. And I didn't want to rain on Dre. Dre didn't care, but I didn't want to rain on Dre's optimism. But I was a little bit more skeptical, and then Brylan is, I think, the true skeptic But
I,
I don't
yeah.
know who wants to start. I mean, I could. I'll just say this. I love the agent. My primary point that I want to get across is that if they are able to achieve a mass amount of people using this agent, then the edge of the agent will no longer matter. But it matters today. So if you get it today, there's a window, I believe it could be 1 year, maybe even 3 years, where having an agent will give you better returns. I can see that. But but I can see a future where it's not going to be, oh, I have an agent, therefore I'm going to make more money. It's going to be, I need an agent. Otherwise, I'm not going to be able to make money unless I'm one of the top level investors and I have a really good skill. So it's going to equalize things. But that's how I see it. That's my take.
Yeah. I think for me, bro, yeah, don't get me wrong. I think them releasing this was just the next step in AI integrating itself into the financial world. But I think what really matters is like figuring out the use case, because I think for most retail investors, correct me if I'm wrong here, but I think they don't understand the nuance of the difference between trading and investing, right? And I think because most people don't understand that nuance, I don't think they're going to be able to kind of get the best use of these tools, because once again, think about the agents that you're using now in your day to day. They're only as good as the direction that you give them. And I think the promise is blindly setting people up to believe that like it's just going to find them opportunity regardless, like almost with like no risk like being associated. I think that's the piece that I'm really trying to get at is I think
I think
I hold up,
you're
hold up.
underselling retail, bro.
Hold up. All retail investors aren't us, bro. All retail investors aren't.
I get that, but all retail investors are not stupid either, bro.
No,
That's
They're
true
you're
not.
right.
too.
They're
That's true too. They may not
you're
have
making you're
capital.
yeah, it sounds like the starting point, which I do agree with risk, but I don't think I wouldn't go into it assuming that they presume that there's no risk. That to me feels too easy to make the assumption. That just feels too
Right.
easy. That feels too easy.
I'm gonna be honest. So let me provide some context where this comes from. So there during COVID, I was a part of this group chat. It was like this Black Men in Tech group chat, bro. And one homie made some money off of doing options, and then everybody started to want to do options. We had a few, folks in there who were the, PPP loan type of brothers, and they had, some cash. Everybody started just running these plays, not knowing what the hell they were getting into, and ended up losing a fuck ton of money. And I think this like to me, that's what this kind of reminds me of is like, I just think the way AI has been framed, even how it's being framed as like super intelligent, smarter than the smart. Like we just blindly trust these things. And I think the easy use case is to have it trade, because once again, it's an API call. We already know these things are good with APIs. I think the tougher thing is to expose like and I know they're using these agents to help people with research, but guess what? How you do research matters. How you do research matters, especially like if you're researching something for like a long-term position that you want to use to build up for retirement. That matters. Are you looking to only hold this for a week or a day or a year? Like that matters. And so once again, maybe I just don't have the information behind like how are these agents actually working from a mechanical standpoint to help
All
people.
that can be programmed via an agent. Like literally nothing you mentioned, an agent can't, like that's not outside the realm of an agent. Like
I
everything that
agree,
you mentioned,
but it's
so
outside the awareness. It's going to be outside the awareness of most people.
they don't need to know though, because they're
They
using
have
the
to know.
agent.
They have to know.
If they're using the
They have
agent,
to know.
they are delegating, they're delegating that to see, we are moving to a world of agents. That's like saying you need to know how to code to build an app. You don't need to know how to code anymore. You can go and say, make this app, it'll make the app. And not only that, you can say, make the app listing. It will create the screenshots, the app store description, the icon, and everything else. And then you can say, submit it to the app store, and it'll send it to the app store. You will be surprised what you need to know with agents. You will be
Yeah,
surprised.
yeah, I agree. I agree with that. I think, bro, I think the agents can actually be better than people, bro. Like, I'm gonna push back on what you said about like your friends making those trades, bro. I'm an investor, and I'm not an institutional investor, and I'm not the smartest investor, but bro, I've lost money on options. I've lost money putting money into options and not knowing what the hell's going on. I've lost money trading on the margin. That's why I don't do margin trading now. And if I do it very minimal. I've learned risk management from losing money. So that's not shocking to me. Any investor has lost money or gone into something where they didn't have clear insight into all the information, didn't necessarily ask all the questions, and stumped their foot. That's happened to every investor. That happens. Like that's just part of the cause, right? But again, where I think agents could be beneficial is knowing those questions that could potentially be asked. So I think the more important thing that you're asking, Brown, is how are these things actually being made, right? Underneath the hood. How's the sausage being made, sort of say, right? I do think that's important. But I think generally speaking, if I'm looking at it through my optimism lens, right, which is what I would want as an agent, right? What I would prefer to use, it will be something that's highly more intelligent than me, right? It can look at more signals than I can, right? I invested in SanDisk. Do you think I went through like their quarterly financials in excruciating detail? No. I looked at the stock. I looked at what's happening in Bloomberg. I looked at the market. I'm like, oh, I think this shit is going up. And I made a bet, right? I made a bet knowing like, okay, there could be some risk, but I took risk off the table by not trading with margin, right? So that if it does go down, I'm not margin call, so I don't have to sell anything. You know what I'm saying? So like, but I'm not like I'm not looking at this through like this lens of like, oh, I need to do this full analysis, detailed signal pulling, looking at this. Like I'm not doing all that, bro. I'm
Dre,
not.
make a good point. That's like how when people drive, most of the time, they're not factoring in everything that's going on around them. But when you hop in a Waymo or a Tesla, it has all that context. And so the Tesla self-driving or Waymo driver, Robinhood, and I forgot the other one, was it Perplexity, Brylan? I don't
Yeah,
know.
yeah, yeah.
But basically, they're attempting to create the Waymo for stock trading. And it is possible. It just has now possible, and there's no reason why it can't factor in risk. For example, everybody doesn't like the Waymo driver because it is more safe. So it's a typically slower routes. It typically does the safe thing, or it hesitates. It does, but it gets you to your destination. So it's possible, using that same analogy, that maybe, for example, you have a trading thing, and maybe you want to make $1 million in 2 years. And maybe based on how that agent operates, and if I had to guess, they're going to be tailored in such a way where it's unlikely to lose money. What do you hear about Waymo all the time? It's the safest, it's the safest, it's the safest, the safest. So I think that when you think about these trading agents, they're going to look at it the same way. They're going to look at it like, okay, we're not going to make these agents that just go out there and make these risky bets. We're going to make agents that they probably, honestly, for sophisticated investors, they might be a little too conservative. I don't know if they actually
That's
would even
if
get.
that's the case, that's great.
I think that's the case. I think that is the case. I don't think they actually would have got that Drake that bet that Dre made. I don't think it would have got that bet. I think that's a bet that a human might do. Maybe if Elon was making it, maybe it might do that, because Elon has I know on the Tesla self-driving, you can do faster drive. You can have the slider. You have a slider, and so maybe that's an option. But if you have a slider, maybe there's a little bit more risk or whatever, and it tells you that. But I think that the default setting is going to be don't lose the user money, and people will see a maybe, instead of a 5%, they might see a 8 to 10%, which is still a much better percent than what they would have done by themselves. And then maybe there's a slider where it's like, okay, this is your risk goes up a bit, but we can now do 12 to 15% is in your thing. And that's a big amount year after year. That's a huge amount year after year. So we got to assume that one, we gotta assume one, we have to have faith in the scientific method, or in other words, the iterative process of product development. Nobody, I don't know if these things are coming out of the box working well. Maybe Brylan in the short term, maybe people are going to lose money. But if we believe in the iterative process of software development, which is very similar to the scientific method, these things should be capable of doing research. They should be capable of pulling out numbers, doing math, and they should be capable of forecasting, and they should be capable of calculating risk and then determining based on the amount of capital that you have and then wherever your goal is and the timeline, they should be capable of making sound decisions that are better than the person who drinks every other day, smokes every other day, goes to sleep on random times of the day, works 8, 12 hours or has a kid. They should be able to do a better decision than the average person who has a million things going on in their life.
Yeah. I tried to sign up for it. Robinhood, they're rolling it out slowly, of course, and responsibly, which they should be doing. So right now it's in beta. They'll be inviting people, but it's kind of an interesting product release for Robinhood. So they have their Gold Card credit card. So they make you sign up for the Gold Card credit card, and then you can create credit cards specifically for agents. So I was able to set up a credit card for an agent. You can allocate a specific amount that that agent has the ability to spend, but right now, I'm still waiting on my invite. But once I get it, though, I'm gonna try it out and see what happens. I might even do run a parallel comparison to see, like, okay, if I give an agent $1,000, and let's say I have the time
Yeah,
horizon of a year,
it's
right, and
worth
I take
testing.
$1,000 over a year, what can we do? What can happen, right?
It's
Because
worth
a thousand
testing.
dollars, if I lost it, I'm not even tripping. So it's like, what is worth it to me, right? Like, what can it actually do? I'm
And what if it turned
optimistic that
into
I think it'll
it turns into
outperform me.
10?
I do.
If it turned into 10,
I'll be mad. I didn't put more. I'm gonna be kicking myself.
what I will say though, although I'm not as skeptic as Brylan, I do see that one thing that we went back and forth on. We I don't know if the edge will last. I don't know. I don't see the edge lasting because I think it will end up being an arms race on who has the best trading agent. If agents start getting good results, people first of all, people
I
can't
think it'll
keep their mouth
last.
shut. People can't keep their mouth shut, bro. So they're gonna tell look at this, and then they increase the adoption. In the stock market, there's winners and losers. So unless you are choosing to consistently lose, why would you not get an agent? That like I don't see why would you not get an agent? Because it will pay for itself. So why would you not get an agent? So with that being said, then to me, then now the game becomes what's the best agent? And then now that becomes the game. What is the best agent now? Because every agent is not going to perform the same. And so that
Well,
to
I
me
think it
seems to
comes
be the
down
game.
to probably what your strategy is, right? I think if you're trying to do day trading, then I agree with you. I do think over time the edge starts to drop, right? Because I
Mhm.
mean, to successfully day trade, I mean, you don't necessarily need to be able to move fast, but I mean, it helps, right? It helps. But for certain strategies, like even what I'm doing with investing, I'm not necessarily looking for. I guess sometimes it is considered a short term horizon because it's less than a year for certain investments, but I'm not necessarily looking to like do something today and then in the trade today or this week or next week. You know, I'm not necessarily looking to move in and out of trades that fast. And so I do think the edge still remains because there's I mean, I don't even want to put a number on it. There's endless trading strategies, right? Now, I
True.
mean, again, when you have AI, yeah, of course, over time, yeah, it can figure it all out, right? But again, I'm just thinking that that's like infinite, right? Like similar to like the scaling laws with AI. What's the roof to the scaling laws? Can anybody answer that?
There are different trading. There definitely is different trading strategies, and in fact, they may discover some trading strategies that maybe weren't immediately obvious. I think though the thing I see though is that if there is a case where they need to move fast and they can't move fast, you could go to zero on your investment. And I guess it just depends on how diversified. It does depend on the strategy. Like if it's a concentrated strategy, that's obviously a very high risk situation. If it's more diversified and is broad, that's different. If it's a little bit more diversified but concentrated as different. So I guess it just depends. But there's some scenarios where
I'm gonna keep it a
if it's
sec.
hyper competitive, I don't know. It's basically what I'm saying is that it still seems you'll need to have the best agent though, because it will need to adapt to whatever happens when everybody has an agent or when most people have an agent.
Maybe. I mean, I think it only if it fundamentally. I think unless we're changing, which AI is changing how companies operate. So this is a whole meta level
Yeah,
conversation,
yeah,
right? But
yeah, yeah.
to me, if the returns are still the returns, if the fundamentals of the business are still the fundamentals of the business, then to me, the what happens in between is almost, I don't want to say irrelevant because it's not, right? But it matters less. It matters less. And so to me, I don't necessarily think the person without the agent is at a disadvantage from the person with an agent, right?
Okay.
Because again, if the market mechanics stay the same, now if market mechanics change, we're talking about something different, and it's hard to. That's a whole different lane. But again, I'm only making this presumption that the economy stays the same, companies' earnings status like continue to rise, but the fundamentals stay the same. So as an investor, if I'm gonna go and put my money into something, like I just bought some Google stock, I don't need an agent to make that trade for me, right? Like that's just, to me, that's a fundamentally sound investment. I don't need AI to tell me to go invest in Google. I'm just gonna go put my money there. I don't need an agent to tell me to go invest in Amazon. I don't need an agent to go tell me to go invest in Vanguard Total Market Index. I don't need that. And so I don't necessarily, I don't see the trade-off. So I think the person that has the agent, yeah, you can go execute 100 trades in a day, or you can execute 10 trades in a year, and yeah, you'll have some edge. But I still think there's value. I still think the person without the agent can still compete. Again, I still think like there's information out there you can still tap into where just make a trade. Like, to me, investing is super simple. Like when it starts getting complicated, to me, that's when I start my red flag goes up, right? But for most people, it's simple, right? And so if you're just applying the simple mechanics to it, you don't really need this agent to actually invest. It's actually not even that useful to you if you're thinking about it from a simplistic way of investing, for which I think most people should be doing, which is putting your money into mutual funds, index funds, and just letting it ride out. And if you're doing that, then you don't really need an agent to tell you that, right? Like the best mutual funds and index funds are already
But you just,
selected.
hold
Like,
up, hold up. You basically just gave the story for why this might not take off. But
no, 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 no,
I'm
no. I
gonna
said
say
for
this. I'm gonna
I
bring it
said
back
for
to
most
the.
people,
We know 80% of the people. I would also
most
say
people.
this. I would also say, because going back to like the first topic that we were discussing, right? Like, and just AI and what it could do to the economy. Like, are we potentially headed towards a crash? Are we not? That world is going to look different, and because of the environment a lot of people are going to be in, if we do reach that scenario, they're going to approach this agent very differently than they would, like, I would say now, probably with like a sound mind. And so I think that's where I'm just a little bit more bearish on the technology, or at least that use case, is that for a tremendous amount of people, I think the timing might end up being off because it's going to put them into a position where they need cash now.
I see.
And
So they'll
because
resort to using these tools, right? I got you.
because the
Yeah,
narrative is this is smarter than me, smarter than any other human, it must know how to make money.
yeah, yeah, yeah.
And it's actually going to
Yeah,
end
that's
up
true.
to them losing more money.
I actually think the bigger
Oh,
threat, now that
shit.
we're talking about this, I actually think the bigger threat is not necessarily the agents on platforms like Robinhood. It's going to be these agents on platforms like the DraftKings, the
That's
Prize
real.
Picks, these betting platforms. Like once they come out and they're like, we'll automate your betting for you, we'll automate your sport, bro. I think that actually is a
Do it.
worse thing
Don't
to
do it. They
society
just gonna
Don't
than
take
do
your
it.
money,
Robinhood.
bro.
Don't do
Than
it.
Robinhood.
Let me tell you why I don't do it. Let me tell you why I don't do it. I tried it. I tried it. I tried to put parlay. I tried to put the stuff into, like, I thought I tried it. No, it ain't gonna tell you if Jalen Hurts is gonna get 100 passing yards. It's gonna be wrong. It's just not
So
gonna
that's the one
tell
thing. That's
you.
the one
It's
thing.
the
Codex can't solve for.
No, no. At least back then. Maybe I gotta try it again, but a little too nervous to try it now. But Kodak, it's not gonna tell you if Stephon Diggs is gonna catch, get to. It's just not gonna tell you. It's not gonna tell you, man. So don't use that agent. I wouldn't use that. But you know what though?
That's a dangerous. That's a dangerous agent. That's a
You know
dangerous
what?
agent.
That was a year ago. So The models were less intelligent, and they
Well,
weren't
hold on.
pulling out as much
Let me tell you
information.
what I would do in this case. Like this is what I would do because I mean they're like you
I
said
tried
they
it though.
if I was to use an agent for like prize picks or something, bro, I would first have it go scrape data on whatever the event is, the player or what is. And instead of trying to get the LLM to predict who would win, I would have it create a classical machine learning model that's essentially just a job, bro. Like I would turn it into a data scientist that
Send me the
go get
prompt.
me the data.
Send me the prompt. Send me the prompt. Make the prompt and then send me that. Send me that.
You be killing me
We
when
can
you
start with
break out
50.
a solution. When you break out a solution, and you make it sound so simple. You always do that. You like, yeah, I would just do this, and then there always be like some complicated shit.
Yeah.
But hold up, we giving it to the AI. The AI can figure out all the
This nigga said
figure out what model we
a
need to
classical
use.
model.
Yeah, bro, we just need to use a real technique. If we use a real technique, we can get there.
We can start. Look, I'm willing to try it with $50. Just it was a year. I'm willing to try because I will tell you this. If it didn't work a year ago, but the models weren't that intelligent a year ago, and I also wasn't using your strategy.
We want to do it with the
I wasn't
NBA
using your
playoffs.
strategy, bro. I don't see why not.
We can use the NBA playoffs as like a test.
If you make a prompt, I will make at least 1 or 2 bets with $50, and if we don't lose the money, if I don't lose the money, I will have a little bit more confidence, and I don't know if we should tell people about that. Like actually no, we should actually if it does work, we need to sell it, and we need to sell
a
it.
Discord channel.
We need to sell it. We need to
Bro,
package it and then sell it.
Those platforms will probably shut that down so quick.
They wouldn't be able to. You know why? Because this is what we'll do. We will.
Hold on, you talking too much.
I know how to get around it. I was a hacker. I know how to get around it. Don't worry. Don't worry about it. I know how to get around it.
We can talk about that in the group chat.
Yeah. Don't worry about it. I know how to get around it. I know how to get around it. We'll see.
I can see people jumping on those agents. I can see people jumping on those. And honestly, we're joking and laughing, but I don't see that being like a far distant thing. I mean, if these platforms see that people are spending more money, which that's their whole business model, right? Get you to make more bets, spend more money, get you more locked in. If you're going to spend more money, engage with the product more because it's an agent that's doing that for you, I mean, it's a business case. I can't see why they wouldn't do it. Only if it hurts their business.
But you know what? No, Dre, you're right. They would. You know what? Okay, if you win too much, they're gonna flag your account, of course. Like that's so. Even though they might not be able to block us from doing the thing, they'll flag the account. But here's the thing: we have a case though. Because you can't get mad because we winning. You can't get mad. We winning.
It's like when you at the casino, you win in too much. They be like, "Nah, come on, get up, big dog. Yeah, you gotta get up out that seat. Like, it's too much. It's too. You know the house don't like to lose, bro. No casino. No casino. They might let you in a little bit, but if you start getting crazy with it, they're gonna be like, "No."
Hey man, we just trying to be Chauncey Billups, man. Get it how we fit in.
Hey,
I ain't heard nothing about Chauncey since.
I actually think that I'm going to try to create a prompt with what Brylan said. I think I'm because you know.
Once again, I don't take how I. Yeah, Don't
I ain't
take
gonna
it
lose no $1,000.
I was just spitballing off the top of the dome, like.
I mean, that's better than what I did. I was just posting screenshots to AI. I was posting the screenshots. I was like, what you think? I was like, what you think? And it.
Hey, nah, I'm about to have this thing scraping data, funny. Bro. All that, bro.
Man, if that shit worked, definitely report the results again.
I got you. Because they'll at least before the flags come up, we probably at least be able to make like 100. At least maybe $1 million. Like,
that's true. That's small. That's small for them. They probably won't even catch that. They probably won't even catch that a little bit. That's slip under bro. They doing so many numbers, bro. It's crazy, bro.
It's crazy.
I can't even believe this shit is legal. I can't even believe this is legal.
When y'all do sports, what's y'all thing? Y'all like y'all money line, spread. You said
I don't do sports betting at all. I've never done sports betting.
I always it would always be so on Prize Picks. You got to have usually you have to do a 2 or 3 leg parlay, right? And so so if it's the NBA, then I might say, okay, Wemby's gonna do 20. LeBron, he's gonna do over 20. LeBron's gonna do 10 rebounds, and or sorry, less than 10 rebounds. It's usually like over under, and you usually got to do 3. And obviously at each one you add, it decreases the odds you're going to win, but it increases your return. So that's what gets people, because if you're betting on 3 outcomes, your $50, if you win, it's like ends up being like $300, $400. So of course you're like, he's definitely going to score this. He's definitely going to do this. But each thing you add drastically decreases the returns you're going to get. And most times you're either going to lose or you're just going to make what you put in. And if there was a slight edge, all you need is a little bit of a slight edge and I actually do think it's possible because they're obviously doing odds as well. They're doing odds as well on their side. So it is possible. It is possible to and we had a friend that was working on this he stopped to do something in this lane still, but he stopped but he didn't necessarily approach it in the way like Brylan just gave him like an interesting idea where instead of just relying on the semantics of AI, the semantic probabilistic nature of it, turn like using the AI to create statistical models and then running it through that is a different
and then
approach.
you use the output from the statistical models as the input.
Yes. Yeah. So I'm highly interested in that, but we'll
Bro,
see.
I'll spin it up after this. Something simple, man.
Yes. Should yeah. Drop it in the chat, man. Because
The model we don't need a GPU to train the model, bro. We can train it on the computer, put it in the cloud, hit the API. It gives us what we need for the data. Like,
it's so tempting to it. It's so tempting. Quick money is always so tempting because if you have a model that you're confident in, you can now do a bet where it's like 500. You know it's going to turn into 5,000. Like your bets get more bold because like like I right now I'm only going to do like a small amount, like 50, 25, something like that. If I lose that, then that's like okay. But if I do a series of 25 and I keep winning, then it's like. All right. It's like, all right, let me put, we want 1,000 and then let me get 10,000 back. And then and then and then at that point you got to control your greed because that's how you get in trouble.
Facts.
That's how you get in trouble. But no laws being broken. Just smart guys on a podcast. Just smart guys on a podcast using the new tools we have.
Facts. Y'all want to end it there, or y'all want to talk about something else?
Yeah. We can end it there. We started off with
that low key need to be on the shirt. Just smart guys using
just some smart guys. just
that's it. Nothing more.
Yeah, nothing wrong.
Nothing nefarious is happening here. Not at all.
Yeah. All within the rule book. All within the rules.
All right, y'all.
Yeah.
Hi, y'all.
Yeah. All right, guys.